Welcome to the Cashflow Academy Podcast. I'm your host, Andy Tanner, and this is where we make investing simple. I'm joined today by my good friend, Corey Halliday, Noah Davidson, and we're going to be speaking a lot about some of the current events in the market, particularly healthcare. Is it a great place to go to now? We've had some news related to the healthcare system, so we'll be talking a little bit about that. And it'll be just some good investing principles that we're going to employ as we talk about the decisions we're going to make. Is this a sector we want to move into because it's been hurting a bit? So is it on sale or is it in trouble? That's always the question. Is it on sale or is it in trouble in terms of the healthcare sector? Also, we remind you to like and subscribe and hit your notification bell so you know when new content is available for you. And then, as always, go to yourinvestingclass.com. We have great stuff there all the time. And don't just hear that ad. That's free stuff. That's not an ad for anything other than go get your free cool stuff. So yourinvestingclass.com. With that, we'll do brief introductions, starting with Noah Davidson. Ladies and gentlemen.
Hi, I'm Noah Davidson. I enjoy talking about the stock market. I've been doing this for a long time, 20 plus years now. And I enjoy the process. I consider myself a student of the game, and it's very much a game that's a lot about temperament and discipline.
Very much so. Corey Halliday in the house.
Excited to be here. I've been doing this for almost 25 years now. I love the education space, formerly worked on Wall Street as a Series 4 option principal, ran an option division, and managed hundreds of traders, and now love to teach and just help other people to progress in their learning of financial markets.
So it was interesting as we were thinking about what would be a timely topic. And when, Warren Buffett, one of the best letters I think he wrote, they're all good, but in 2021, he talked about what he calls the shooting the fish in the barrel experience.
Yeah.
Which denotes that he said, one of the advantages, and I'm paraphrasing slightly, not too far off what he said, that one of the advantages you have in the common stock sector, the marketable securities arena, is you have an opportunity for detachment from value, both ways. Things can become extremely overpriced and very much underpriced in the extreme when there's current events that happen. For example, this week, we had a tragedy. The violence is just fatiguing. Certainly there's been more violence, I'm sure, in the 1800s than in the 2010s or 2020s. But still, the fact that it's broadcast, there was an executive at CNN that had a horrible I don't know what this is, a saying, where he says, if it bleeds, it leads. That's a horrible way of saying if we have violence, it'll bring eyeballs. But that attacks our humaneness. It attacks who we are. I mean, we are there to have alerts. Our bodies have mechanisms to say, hey, there's a danger alert. So when there's blood, what's going on? It's big news. It gets people excited. And so that's unfortunate we have these shootings, and I lament greatly that people can get into a state so low that they feel that's the option they're going to pursue. It's unfortunate that we have that. So Noah, why don't you fill us in on the news? I was you can tell I'm still coughing and rasping a little bit. I had a horrible cold last week, and I didn't watch much TV or internet. So tell us a little bit about United Healthcare and take us through the scenario.
Well, United Healthcare CEO gunned down in not quite broad daylight because it was still dawn. It was 7 a.m. or so, heading to a big executive meeting, and looked like an assassination style type shooting.
Was he walking or in his car?
Just out in front of the building.
Yeah, no security. He was just
no
by
security
himself.
detail, just walking by himself. Guy walks up with a hooded sweatshirt and a backpack and
guns him down.
Pop, and walks off, and police have apprehended a suspect, and Luigi, can't think of his last name off the top of my head, but they found him within 5 days, and the stock price, tumbled, but it's kind of created a conversation around the healthcare industry because this gentleman apparently had a manifesto and talking about many of the injustices around the healthcare industry and the amount of care people get for the money they pay for their insurance.
Yeah, and this individual, so it sounds like obviously innocent until proven guilty, but he had a lot of things that kind of point towards him being the one that probably did it, including kind of confessions and things of that sort. And some of what he brings up, it's interesting because you can have an individual that did something absolutely terrible, and yet maybe some of the points he's making are good points, right?
Well, like
and
Ted
so
Kaczynski had some fantastic points in his manifesto.
That's
when
the
he was
problem.
talking about
I missed that one. I didn't read that one.
It's some light
regardless
reading.
of how valid his points may have been, I don't know that they were
horrendous
justified
individual. But there's never justification of that. But are there problems within the healthcare space that need cleaning up? And do some of these healthcare companies do things to make it very, very difficult for individuals that are not knowledgeable enough about their healthcare services to get what they're actually justified in getting. And so a company can sort of take advantage of people if those people don't have enough knowledge of what they have in terms of coverage and those sorts of things.
When I invest, I take off my political hat and put on my investor hat.
Yeah.
Because I need to be dispassionate. I certainly have my leanings. Anyone that's listened to us knows that the three of us, actually, I think I can speak for all three of us confidently, that we like to lean on the side of individual liberties rather than collective safety, maybe. But or I would say collective overprotection might be a better way to put that. But these are important discussions because what we're trying to decide is, do we want to get exposure to healthcare? Let me share why I think healthcare is on the table as part of your portfolio. I don't have a lot of exposure to it right now, quite frankly. And what appeals to me is if there's a pullback and an entry opportunity coming, what are the necessities? Food, clothing, shelter, medicine.
Yeah.
So real estate appeals to me because it's a necessity of life. And I would add technology as a necessity of life. So food, clothing, shelter, medicine, and I would add technology because it's part of our. It's now a necessity. Yeah. Not a. No one's going to go be an Amish dude in mass. We can't all just go back to a farm now. It's not going to happen. We are now beyond the point of return. We can't all go back be farmers now.
Yeah.
So
and
technology is now a necessity for society.
And we always talk about it from the investor standpoint. Of course, this is what we do. Yeah. And you look at the stock price's reaction after this event. So initially the stock was fine. It actually went up a tiny bit. And then over the next couple of days, it dropped significantly. And I think...
Which is why I like it, because when I can find an event that is outside of the business earnings. I mean, the amount of
just an emotional reaction.
The only thing people might say is, "Oh, I don't want to buy that because it's got a negative connotation to it now."
Right, and then the concern, the concern would be, well, what is the company doing? What's going to be brought to light because of this? Are there skeletons in the closet, so to speak? Are there going to be things where maybe there's going to be some points brought up that are very damning towards the corporation itself? And does that mean that they have to overhaul some things? And does that hurt their earnings? And so these are the questions that investors...
And leadership.
Yeah, and leadership as well.
Warren Buffett talks a lot about this. He doesn't want to micromanage as an owner. He wants to find a machine that's running. And let's say a CEO gets fired because they were mismanaging. That's an opportunity. Maybe the devil you knew is better than the devil you don't if you got fired. But where a CEO is assassinated, that creates a leadership void. Yeah. And it creates a big unknown of who's gonna take those shoes. So I can see the drop in price, more than just, something bad happened.
Yeah.
But I also wonder if it's an opportunity.
Yeah, for sure. And maybe the healthcare space, the entire healthcare sector, we were looking at that before starting the last week since that event took place, that United Health has gone down significantly, 10 or so %. The healthcare sector has gone down as well, not nearly as much, a couple of % lower. But sometimes when you pass through these things, it's one of those questions of, it's always ultimately a question of what value am I getting for the price that I'm paying? Is it different as a company today than it was before? If this doesn't materially change the company in any way, shape, or form, then obviously it's an opportunity. If, however, we think that now there's going to be more scrutiny on that company and there's going to be major changes that take place, well, then that's a different equation. Because that could.
Even then, though, even if that's the case, doesn't that mean positive change? I mean, they're never going to tweak anything.
Well, it would be a question of if there are things within that could be clawed back. Like, is the corporation doing things? I mean, I wouldn't say fraudulently, but what if there's?
Let's bring out the deny. What was on the shell casings?
Deny. Defer,
deflect,
depose, yeah, something like that.
So their mantra internally apparently was deny claims. That hurts a business. If people get the persona of those guys, if this becomes a negative advertisement for this company, say, well, these guys had the problem. Why? Well, because they're known for denying claims. They're known for deposing people, having to have them, to me, a deposition is a court action.
Yeah, you have to go and swear under oath.
And get lawyered up, and that's a pain in the
I'll
neck.
give you my personal. I mean, I have a personal perspective on it because I have actually been
You've been a customer of those guys?
of United
Let's
Health
take them down, man.
And I was not very happy with the quantity of care I got. They denied all my claims, and I had a difficult time going through that because I was also going through a health crisis at the time.
Do you mind sharing your health crisis?
Oh, yeah.
Can we get intimate?
We certainly can. I had an interesting mystery disease nobody could figure out, and it ended up being Lyme disease, and it took me 10 years to battle over it.
Yeah.
But I ended up having to pay out of pocket for.
You got bit by a tick.
Yeah, and it was seemed seemingly unrelated at the time, and so, and I self-employed, and so I was paying for nice little package from United Healthcare, and at the end of the day, I ended up paying for nothing but premiums and getting no service.
None.
And I just didn't have the bandwidth to go after them at the time. So I personally switched providers and found better healthcare. But I also think there's an interesting aspect.
Probably a better alternative than what Luigi chose.
Well, and out of all the healthcare providers out there, they are the top rank when it comes to denying service. Like 33% of their claims.
So if this brings attention to that fact, this could be.
Yeah, and the third word was delay. That's another thing.
I said defer, delay.
Yeah.
Why wouldn't you pay it if you can earn interest on that money another month?
Exactly. So the more they can delay it, the more they
delay and
bring in.
And that's what we're on the show.
Well, and I actually had spoke to one of their claims adjusters who said that they denied everything right out of the gates. They told me straight up that they just denied all claims, and you had to kind of refile to get your coverage.
So you switched providers.
I've switched providers, but I've also, I think the space in and of itself is now interesting because you do have a government aspect in it with some of the I don't know. This
is awesome because
the Obamacare.
They have Affordable
this
Care
is
Act.
awesome because I'm going to go out and buy this even though they screwed Davidson. Yeah. It's kind of like Bill Gates and Buffett are like best buddies. But Buffett bought Apple.
Yeah.
You know what I mean?
Yeah.
He
would have done pretty well with Microsoft too.
When they asked him, he was interviewed, and they asked him, "What's your biggest mistake?" And he said, "Sins of omission." He said, "I missed Microsoft."
Yeah.
He said, "I wasn't a tech guy. I didn't understand. I don't invest in things I understand. Wish I'd have gone big in that one." He says that's one of the big ones he missed.
Yeah.
Was Microsoft. So I'm gonna. Well, if they screwed Davidson, let's buy it. Yeah. That's good enough for me.
Well, you got to get your money back somehow. That's a good way of thinking about it.
Well, I don't think that United Health is alone in this either. No,
No,
it's a
not at all.
problem within the industry.
It's a problem systemically in our fiscal commitments as United States. People in Canada or countries that have what do they call it?
Single payer healthcare type
whatever
stuff.
it is.
Yeah.
What's the word for it though?
Universal
healthcare from the government. Yeah, but the taxes are out of control. So the when we come back from break, let's talk about the systemic problem of healthcare, and is that problem an opportunity? I have some big questions for you guys, and I'm curious about your thoughts because there's a lot of money in healthcare. Yeah. And if there's an entry point here to expose myself to some of that, I want to do it. So we'll be back in just a bit with a reminder. Go to yourinvestingclass.com, like, subscribe, and we'll be back in a moment.
Responsive to questions. They're very detailed in their training. You can start from no investing experience whatsoever and get educated and be able to make a nice retirement for yourself or even a living. It's an amazing educational system, and I would highly recommend it. The one thing that will get you more confident in investing is your education, your competency, and if you can get to that point, you can do anything.
Welcome back to the Cashflow Academy Podcast. I'm your host, Andy Tanner. This is where we make investing simple. We're talking about the healthcare sector and United Healthcare, the assassination of their CEO. And what is that? That certainly does put it has put the spotlight on the problems inherent to insurance companies. It's a huge issue. David Walker was the head of the Government Accountability Office, the GAO, they're really the investigative arm into Congress, and they have a budget. They put out the GAO budget every year, and they scrutinize it and say it's unsustainable. David Walker, bipartisan guy, served under both Democrats and Republicans for probably a couple of decades, I want to say, as the nation's comptroller general, the nation's lead accountant. And he quit his job in frustration. He really did. He boxed up his stuff, and he went on this wake-up call tour that was really like I remember that 2020 or 60 Minutes or whatever they were, they said he's like an Old Testament prophet trying to tell everyone the flood's coming. And he said healthcare is the big issue. He said the biggest threat to the United States is not someone in a cave hiding in Afghanistan. It's our own fiscal irresponsibility. And he said the biggest problem is healthcare. So healthcare is a promise, not money that's borrowed. It's money that's promised. And as we have an aging population that's expanding for those benefits, and the cost of those benefits are getting higher. So of that $200 trillion we owe everybody in terms of promises, not owed that we borrowed it, but owed that we promised it, which means we will have to borrow it.
Yeah.
That looms large here, and this event brings these problems into focus. If we improve healthcare, here's the biggest question for the investor. You would think that if you improve healthcare, that'd be a better place to be. But in my opinion, perhaps improving healthcare would hurt profits more now for insurance companies than do better. Usually when you're doing things right, you're more profitable.
Yeah.
But when you're doing things wrong, you're not. And it seems like they're doing things wrong. So if they fix it, does the fix increase profitability or decrease profitability?
Yeah, I mean, I think it would hurt their profitability if they were to follow what they actually, so immediately denying claims. A lot of people are just simply not going to fight for what they actually deserve, right? And
Absolutely.
So if you just allow, hey, if you actually help people to get what they deserve,
Especially
which
the
is the
small guy.
right way to treat people,
Yeah.
I think it would hurt their profitability. And that's the concern that I have with this space is, number one, I don't really love the idea of being an investor in companies that are preying on others, right? When you're taking advantage, that always strikes me as, and I do try to take into account, that if you go a little too far on this, you'll never invest in any company because every company out there has something
warts.
that you won't like.
Yeah, they have warts on them.
And so you have to be careful about that. But that's one aspect of it is, okay, can I justify this in terms of, do I believe that this is a company that actually cares about their customers and puts their customers first? I think that's important. And number two, what would that mean? And what's their valuation and those sorts of things? And so then you got to crunch the numbers and say, well, if this does hurt earnings, how much does it hurt earnings? And how much does it hurt revenues? And, do a math equation there. I haven't stepped in at all.
Do you have exposure to healthcare stocks?
I do, but I don't have. And again, the names that I'm going to name are probably names that people would have a problem with. But I've got AbbVie as an example. Mm-hmm. That was one where I actually owned. It was part of a company that basically they got bought out by AbbVie, and then the company that I owned. It
was an M&A.
It was an M&A, and so I own AbbVie after they got acquired by, or I owned AbbVie after they acquired the company that I owned. Anyway. Right. So I owned shares that way, and the company that I owned was big in the breast enlargement and that space. So, it wasn't something that was critical
the
towards it.
Would be inflated.
You were hoping to augment your returns.
Exactly.
Oh my goodness. Here we go. Back in the ninth grade.
They were in the plastic surgery space, and then AbbVie ended up acquiring them. And so I have AbbVie shares, and I have some healthcare exposure, but again, if you nitpick a little too far, they're all going to have warts. And so that's the difficulty.
Someone that's,
yeah,
manufactured something in a sweatshop somewhere.
Yeah, I mean, if you look at tech companies, you could scrutinize them.
They're going to mine their you look at Elon Musk.
If I invest in Nike, I'm going to have issues with them making their
because all the guys on the left loved Elon because it's all about clean energy and all that. Yeah. And as soon as he went politically now he's mining stuff in Africa that's killing people. I mean, it's just whatever.
There's always something.
Great cars.
Yeah.
Those Teslas are great cars. How do you know they're great cars? When's the last time you saw an ad for Tesla? You didn't.
Yeah.
They don't need to. Their word of mouth is sufficient, which is a huge. When you have something that good, where you don't need to advertise, and your PR is brilliant. Everything he is PR. No, do you own any healthcare stuff? You're more. You'd be an ETF.
No, I've got some exposure to like Solventium, which was a spinoff of 3M, which is not really. I mean, it's healthcare products, but not. I don't think it's
insurance
directly in the insurance industry. I had an option position that I closed out on Novo Nordisk, but other than that, no. Yeah, I think the industry is going to be under a lot of scrutiny.
Do you?
I think for the foreseeable future, I think the investment opportunity is down the road.
There's so much. It's to me, it's not often we have a 200-day moving average that we're flirting with.
Yeah.
And when something flirts with this 200-day, you can look at two ways. Well, they're really in trouble now. You get down to the 200-day. A lot of people look at that, which causes even more selling.
Yeah.
And to me, I'm like, man, if this is cheaper than it's been in the last 200 days on average, don't I need to look at it?
Yeah.
As a chance to buy it. And the nice thing is, fundamentally, Warren Buffett would go through the numbers and, go through his deal. But one of the nice things is you could buy this with the idea that I want to buy it and see how it plays out fundamentally, if you didn't know. And you can always hedge, you can always option, you can always exit.
Yeah.
My question is when it falls like this, is there an opportunity in either that stock or in the industry?
Yeah. And I would think personally, I would expect more selling. I think the RFK stuff is also an impact to the healthcare
effect. It's affecting healthcare stocks and the food producers, like the Conagras of the world and the
Kraft Heinz. Yep.
I don't care how people feel about RFK. Look, he's a disruptor, and he's got some alternative ideas. And libertarians are all zany, and it's kind of weird because if you look at what they kind of stand for, most of the time, they get extreme with isolation. They get extreme with a lot of things. But most of their stuff kind of resonates with most people. But when you look at who they put out there to lead, you're like, McAfee?
Yeah, McAfee was
Are you
not
out
a
of your
good.
freaking mind?
Yeah, McAfee was
You know,
not a
there's
good
dead bodies in
representation.
Belize, you know, from what I've heard there. So it's kind of a tough thing. So you look at a guy like Kennedy, and I've noticed, you know, stuff like Kraft Heinz, you know, food companies, which are a staple, usually a flight to safety. They're like, all our additives and preservatives, all the things that we've got in there to make our stuff last longer, make us more profit. Everything that is in those foods that is negative is there for profit.
Yeah.
They didn't put it in there for any other reason.
It wasn't an
It
accident.
makes them more profitable. So they've taken a hit. And my question is, are they just afraid of that? Should I load up more? It's always the same. Is it on sale or is it in trouble?
Well,
I think that the scrutiny is going to be ongoing and the opportunity's there. But if you're looking at maybe a cost average opportunity, like maybe buy some here, I think there's still downward pressure on it.
yeah. And ultimately, usually when it comes to government, it's never quite as bad. Like I'll use an example.
Exactly.
Trump just got elected and everyone was freaking out about tariffs and what that would do. And China just shot to the upside massively, you know, and some of their stocks like Alibaba was up 15% or whatever, you know. And so a lot of times the fear of these things, like a word like tariffs and, well, China's going to be in trouble because of this. A lot of times that creates the opportunity when others are too fearful to step in. That creates the price that's an opportunity. And so I do think it's the right mentality to have. The question is just how far it's going to go. And like Noah said, I think it's going to be an ongoing. I would actually say that tariffs are an old story, so there's more of an opportunity there.
Yeah.
Whereas the RFK stuff and changing the things that are in our food products and, you know, some of this stuff with the healthcare stuff, that's a little bit of a newer, so it's a more of an unknown. It's something that's new and it has to be priced in, and that pricing in may take weeks or maybe even a couple of months. So I would anticipate there's still more room for it to fall. But then once it becomes kind of an old story and moves away, that's usually where you can pick up the pieces.
I'll give you a perfect example. I've been looking a lot at Boeing lately.
Yeah.
You know, they went through a period where they had, you know, mechanical problems, leadership issues, financial issues, down. Well, this is kind of a dogs of the Dow type, you know, approach where you find the stock that's been most beat up. Now they've got a new CEO in town as of August. They've got a lot of their pricing problems have been priced in, and
I'm bullish on that.
I'm bullish on Boeing.
Yeah.
So that's kind of the opportunity.
And
Where's
it really,
is it at the bottom? I don't know, but it has all of those. It's already been priced.
You let it wash out. Yeah, you have to let it kind of wash out that way.
I don't even know if you have to pick a bottom on it, though. I think you can, if you're a good fundamental analyst, you can see where value is. Look, there's been stocks where I've worked with you, Corey, on where I've said, you know, what do you think? You'll say, well, look at the price to book.
Yeah.
I mean, you actually there's stocks you can find where when you
if we're
buy
gonna use
it,
a term
you're
like-
getting more book value than price
Than what you pay, yeah.
right now.
Well,
And I mean,
break down price to book value for our.
so I should not use. Thank you. No, I should not use jargon. So let's look at what's on the books. That's a good way to think of it. Is what do they have on the books? So if you look at a balance sheet, what's on the books, you can kind of see what a company's worth. Let's say someone purchases a business. Upon that purchase, they now own all the assets and they all now owe all the liabilities. So you basically inherit the balance sheet. You're buying the balance sheet. Well, let's say that for every share of stock I buy, there's $10 on the balance sheet, but the stock's at $7. Well, wouldn't you spend $7 to buy 10?
Yeah.
And that can happen when stock prices get detached from what we would call that kind of a valuation. So all those price to metrics, price to earnings, price to sales, price to book, price to...
Well, price is what you pay, right? Value is what you
price
get.
is what you pay.
So it's sort of a way to think of that would be like Kelley Blue Book. Like you were going to go buy a car.
Yeah.
And it would give
What's
you
the book
hey,
value?
here's its book value at $7. But, you know, and you might be able to buy the shares at $5.
Yeah.
Or if it were a car, maybe the car is priced at $70,000, but you can buy it at $50 because somebody's just, you know, aggressively trying to sell it and get out of the payments or something.
Couldn't we say that any time the book value is smaller than the price, it's under $1, right?
Yeah.
I mean, that way the way to figure it. If you had a book value of 0.9 or 0.8,
Yep.
you at least have to look at it,
Yeah.
right? So do I need to let the price fall when I say, okay, look what I'm getting priced to earnings, look what I'm getting priced to book? Of course, growth is the other thing. You're buying growth, price to earnings to growth. So when you purchase a stock, you get their growth, you get their earnings, you get their book, you get their sales, you get all that stuff. So as the price of a United Healthcare falls, I'm going to look at those valuations and say, do I need it to go further, or am I happy?
Is it just great here? Yeah.
Am I happy? There's a trap, I think. Tell me if I'm wrong. Push back. There's a trap, I think, that some people, their mentality is, I want to get the best deal, not just a good deal. In other words, they're the type of guy that'll go to Nordstrom's and they'll buy a pair of jeans for $150 and feel great about it. And then if they go on sale the next day for 10% off, they're irate. They feel they've been screwed. Wait a minute, yesterday you were totally happy with this transaction. Yeah, but now I feel, a pound of thing.
Yeah.
I think the way I like to think about investing is what values in the eye of the beholder, what's it worth to me?
Yeah.
And if I can pick up someone with a great price to sales, a great price to earnings, a great book value, worth the money.
You don't care what it does in the short term.
Now it's time to pounce. If it goes a little lower for a while, it goes a little lower for a while. The other mentality of it is how fast can it pay for itself. I don't need to get the lowest price if I get a price where I say, all right, with dividends and call writing, how fast will I get my money back at that price?
Yeah.
That's acceptable. Let's hop in. That's what I really want to do the research on United Healthcare.
Yeah, and
is what is their? I wonder what their book value is.
Well,
right
I've
now.
looked at it, and they're not a tremendous value yet. Last time, this is kind of what stunk about the market lately, is from a sector standpoint. There's nothing that's just screaming absolute value. And the last time I remember that we had a great opportunity was actually when we did a live event in Houston, and the financial stocks had been hammered with Silicon Valley Bank having collapsed.
Yes.
And we were in that.
Citigroup.
We talked about Citi, and we talked about JP Morgan Chase, and we talked about a bunch of those. But that was that
Citi's
price to book value.
Citi's book
where it was
value was
less
under
than
$1.
one.
Yeah, it was under $1.
And we were talking about those banks in
My
that
son
live
bought
meeting.
It.
Yeah,
I bought it.
Yeah.
Yeah.
Yeah, we bought financials, and
it was
that
a great move.
Absolutely. It was the timing of it. It probably, I don't even remember. It was probably pretty good, but it didn't need to be because the value was there.
But the value of this podcast, I didn't mean to interrupt you.
No.
The value of this podcast is I think it can help people think how investors think and get insight is that whenever something's down, everyone's, look, the stocks is I think the general masses will see those two.
You're saying is if it bleeds, it leads?
That's exactly right. When it, I'm not saying
well,
that.
there is the old
I'm
saying.
Confirming that.
There is saying when
I'm not
buy,
proposing that. I'm confirming that it's true.
Well, that's actually a stock market saying. Buy when there's blood in the streets.
Yeah.
That's a stock market saying.
Not that we're hoping for blood in the streets, and certainly we literally had blood in the streets. We literally had it, which isn't something to be trifled or joking about. But the idea of when we see impairment costs because they overvalued Oscar Mayer's name brand.
Yeah.
And because that didn't play out, the rules say that you have to reduce the value of this list on your balance sheet because it hasn't proven to be worth what you said it was worth. Yeah. That doesn't affect hot dog sales.
Yeah. And I love the financial sector example where Silicon Valley Bank got into trouble. But then people wanted to flood the small banks and go to the big banks because they were backed by the government. They were too big to fail. So you literally had money moving into Citi, and yet Citi was tanking on. I mean, literally their business was improving, and they were trading cheaper and cheaper, and were well below one price to book value. And we said, this is an opportunity.
The discussion isn't about whether it was an unfortunate crime, tragic, more than unfortunate. That's an understatement, a tragic crime. It's really, is there an opportunity with that price dropping? Do we see value?
Yeah. And to be, I think about almost all headlines through the filter of a trader or an investor.
Yeah.
And I think about, I don't think from like a political perspective. Like I watch the election outcome. I don't personally have a dog in the fight, but I go, oh, I bet energy stocks rise.
Yeah.
And I think I just filter it through an investor mindset. And I think about where I think that, the healthcare industry is going to get hit. I think that the food producers like Conagra are going to get hit.
Yeah.
I think maybe some of the fast food industry gets hit. But then I think that's going to create investment opportunity later. Right now, I think deregulation is going to help the oil producers, particularly the U.S. specific oil producers, perform. And so the market is, again, a forward-looking instrument, right? And you always just think of it's kind of the whole buy the rumor, sell the news type mindset. I filter all headlines through that investor mindset.
Yep.
It's the detachment. If you can gain one thing from this discussion, it is the vigilance in looking for detachment of price from the value that you can receive.
Yep.
And when there's an event that is extraordinary, that is outside, then we kind of have to decide, all right, why did the stock price fall? And generally those knee-jerk reactions are more severe than they need to be because people are obsessed with the price of a stock rather than the value that's still there. You know, when Kraft had the impairment costs, Buffett didn't flinch. He paid $70 for it, and it's $30 now.
Yeah.
But the income he receives from it, the dividends he received from it, well, it's still worth it. You know, it's still paying back his $70 investment, even though we got in at 30s. So great stuff. This is what I do believe. Food, clothing, shelter, medicine, technology. Those are staples, man. You got to have a cell phone.
Yeah.
You got to have an email. You can't function without an email now. You can't. You used to have those people say, "Hey, can I get your email address?" I don't have an email. Oh, he's not on yet. Now, how do you buy movie tickets? How do you function without giving your data into the big pool? Other news that's interesting was the qubit that solved the big Google problem. We might have to talk about
thing
that.
We're talking about.
Yeah, that might be the next podcast.
I've been actually studying quantum computing from a distance. I'm not a computer programmer, but Google, IBM, all those companies that are cracking that code, their stocks are cheap because once they crack it, they're not. I'm not waiting for a pullback on those. Yeah, you have to own AI and you have to own quantum, and the fact they're figuring that out and hitting milestones like this, because quantum's been dangled out. It's 3 years away for the last 10, 15 years. We're 3 years away. But when you make a milestone like that, that's big. Genetics. I was listening to. I can't remember what podcast it was, but they had the guys bringing back the woolly mammoth. They're saying 2028.
They can bring it back.
They're thinking they're working on artificial wombs. They're thinking they can get the thylacine back, and the mammoth back 2028. Dodo bird's gonna take a little longer, but they're getting close.
I thought the dodo bird was already back.
Oh my!
Like they found him in nature.
He's probably got his own.
Well,
crypto.
the Dodo restaurant's kind of nice.
Oh yeah, it's not too bad. I like
their Dodo.
Good place to eat.
Yeah.
But I mean, that's something when you live in a world where they're like, hey, let's make a mammoth. Let's go do that.
Yeah. And what's the purpose?
Mammoth rides. They would be fantastic.
They actually talked about it. The funny thing, the exercise in doing it just from proprietary education.
Well, they flirted with the dinosaur idea first, but then they proved that.
So they're going to bring the mammoth back, and then they're going to dissect it.
They say that the part of the big income the host asked a very interesting question: how do you make money on mammoths? You're going to put them in the zoo, you're going to put them in the wild, and the problems of putting them in the wild. Can you imagine introducing a new species anywhere? The people in Canada, Alaska are like, huh? Yeah. Throw this mammoth out there. I mean,
sounds like a bad idea.
It's zoo.
There's going to be mammoth wool. It's going to be a new commodity.
Mammoth wool. There you go.
Very warm.
Oh, very warm. No, it's very warm. It's lightweight. Lightweight, warm. Yeah. Better than wool.
Smells a little, but
It's got a fragrance. It's got a unique fragrance to it. The woolly mammoth.
That might make a nice cologne. Don't they use,
How long is the wool on a woolly mammoth? That would make a heck of a coat.
It would.
Yeah.
I see P. Diddy rocking the woolly mammoth coat. Not now.
Well,
Right out there on the
he might
red
need
carpet.
he
with
might
the-
need something to keep him
out
warm.
there on the red carpet. Yeah, he might. Out on the red carpet, sporting
And
the woolly
I'm
mammoth.
calling it right now. When he supposedly kills himself, he probably didn't actually kill himself.
Oh,
so.
there's too many. There's problem is it's not the celebrities that got to worry. It's
Yeah.
the politicians that were those parties that got. Everyone's talking about the celebrity list, like J-Lo was there, so we expect that.
Yeah.
Like, well, if she wasn't invited, you say, huh? Right? Oh, Michael Jordan's there.
Well,
of course,
I think
of course LeBron
J-Lo
was there.
Wasn't J-Lo married to him?
It's
or
the senators
something
you
at
got to
some
worry
point?
about. It's the congressmen you got to worry
Yeah.
about. We haven't heard much on those guys.
Yeah.
Right? Who are at those parties? Anyway, a lot to talk about. The more important thing is understanding value when you see it. That's long-term investing. And when things like this happen, it's time to take a look at the healthcare. I know and it isn't that it has to be below one. You have to look at growth. You have to look at other things. But those metrics, those basic, easy valuation metrics, are there for a reason. What
Yeah.
are you getting when you buy it? And that's a huge component to this discussion, because if you see United Healthcare dropping or the healthcare sector dropping, well, if a person that looks only at price is looking at support resistance saying, well, where's my shot here? But a person that's looking to buy it as a business has another lens they can look through, another mode of evaluation, and say, no, this is really expenses. In fact, it hasn't even come back in line where it should be yet.
Yeah.
So the fundamentals help. They really do, even if you're a trader. So anything else? Is that good? Well, good. That's a
Good
wrap.
stuff.
Food, clothing, medicine, technology, and healthcare. We got to have healthcare, and I think it's a sector to continue to look at. You've been watching and listening to the Cashflow Academy podcast. We do our best to make it simple here. Click like, subscribe, and most importantly, go to yourinvestingclass.com. Check out the free stuff we have there for you. We'll see you next time.